Tesla Insurance is poised to disrupt another billion-dollar industry thanks to its massive data advantage over traditional auto insurance providers. The electric car maker's insurance system is only available in California today, but the company plans to expand it to other US states and ultimately other countries soon. Once it does, it would be no surprise if Tesla ends up with millions of insurance customers from its fleet alone. The global motor insurance market is estimated to be more than $880 billion in 2019 and is expected to continue growing as more of the world's population increases and requires vehicles to travel. Premiums for motor insurance accounted for more than 40% of the overall non-life insurance premiums paid in 2018. This is expected to increase in the next few years due to the rising demand from developing countries primarily in Asia. The mandatory requirement for a vehicle to be insured by various countries across the world, combined with the increasing sales of new vehicles, is expected to drive the global motor insurance market. There is normally excitement about most of Tesla's new products, but insurance is an important one that has been largely overlooked with less fanfare and no stage performance by Musk. In the long run, this is going to have a major impact on most of our lives, perhaps even greater than Tesla's more eye-catching innovations. The automotive insurance business is as massive as it is lucrative. In the United States today, the car insurance market is almost worth $300 billion. That's a massive area that Tesla can enter and take serious market share with its insurance offering, which is nearly impossible to compete from with other traditional insurance providers. If you're enjoying this style of video, feel free to give it a like and subscribe for more. Conventional insurance providers live or die with their actuaries, who are professionals whose job it is to analyze financial risk through a combination of mathematics, statistics, and finance theories. Actuaries determine how much of a premium is charged to the customer using as much data as they can acquire. This is where Tesla holds an advantage against its competitors in automotive insurance with constant data monitoring of their vehicles. Elon Musk has made a name for himself as a data-savvy innovator, and he's seeking to continue this by scaling up and expanding Tesla's car insurance product across the US using data as its tool. Tesla is aiming to create a major insurance company that would utilize vehicle data in order to determine insurance rates for drivers on the basis of how aggressively or safely they drive on the road. Musk is optimistic about the future of Tesla's car insurance, which he called version 2 during the July 2020 earnings call, stating, quote, "Ultimately, where we want to get with Tesla Insurance is to be able to use the data that's captured in the car, in the driving profile of the person in that car, to be able to assess correlations and probabilities of crash, and be able to then assess a premium on a monthly basis for that consumer." End quote. Tesla's vehicles are always connected, and the company can tap into each member of its fleet to acquire every bit of information needed to provide owners with a fair and balanced insurance premium. The car maker can accomplish this easily since its cars already send back driving data to the company consistently. This means that when Tesla Insurance gives a quote for its service, owners can rest assured that it is based on actual driving data from their vehicle. Such a model works very well for Tesla, since the company's cars are improved at a rate that is unparalleled in the industry. Teslas are always in a state of change as the company rolls out improvements as soon as they are ready to be released. The company's electric cars are also incredibly safe, being up to 6 times safer than a regular vehicle when autopilot and safety features are enabled. Every time there is an accident, Tesla has instant access to data about driver behavior that led to it. One attraction for the company is that it can evaluate how some of its technologies, like autopilot, stability control, anti-theft systems, and even bullet-resistant steel in the Cybertruck, can reduce risk. Another motivation for Tesla is that some insurers charge a relatively high premium for Tesla cars. One reason is that they still don't have much historic information about the cost of repairs to electric vehicles. By vertically integrating insurance into its offerings, Tesla brings down the price of owning its own products. But it's not just about Tesla customers getting fair and reasonable premiums for their vehicles. Tesla Insurance can help boost the company's finances. Say if one were to use $2,000 annual insurance premiums as a starting point, 10,000 customers of $2,000 already give the company $20 million of float every year. So what is float exactly? In short, float is the money that an insurance company gets to hold on to between the time customers pay their premium and the time they make claims on their policies. This is what Warren Buffett at Berkshire Hathaway has done, investing this float money, where he has stated in their annual letter that, quote, insurers receive premiums up front and pay claims later. This collect now, pay later model leaves us holding large sums of money we call float that will eventually go to others. Meanwhile, we get to invest this float for Berkshire's benefit, end quote. If Tesla ends up providing insurance for about 1 million cars in its future fleet, the company could end up making $2 billion from the service alone. That's a substantial amount which could be used to build another gigafactory. So this is just the tip of the iceberg for Tesla, as they will continue making more vehicles moving forwards. Tesla insurance could be 30 to 40% of the value of Tesla's car business. In Tesla's 2020 Q3 earnings call, Elon Musk touched on Tesla insurance, stating, quote, obviously insurance is substantial, so insurance could very well be 30 or 40% of the value of the car business, frankly, end quote. With Tesla being the most valuable car maker in the industry, this means that its insurance business will be pretty valuable. Value Penguin has a top 10 list of the most valuable auto insurance companies today. State Farm takes the number one spot with $42 billion and 17% market share. State Farm is followed by Geico at $33 billion and Progressive at $27 billion. With Musk indicating Tesla insurance could be 30% of the car business, and at a market cap of $450 billion, 30% would be $135 billion, and this would knock State Farm from its number one spot. Elon Musk explained some of Tesla's opportunity in this area on the conference call, stating, quote, as we've talked about before, with a much better feedback loop, instead of being statistical, it can be specific. And obviously, somebody does not have to choose our insurance, but I think a lot of people will. It's going to cost less and be better, so why wouldn't you? End quote. The feedback loop is a key benefit of Tesla's insurance. Tesla will be able to better examine the cost of repairing its vehicles. In the long run, this will save Tesla customers money while allowing Tesla to make any changes that it needs to make in order to bring the costs of common repairs down or reduce the likelihood they'll be needed. It is very helpful for Tesla to have a feedback loop to see what is driving insurance expense. A lot of it could be a fender bender, and with a poor design could cost a lot because of the way the body collision repair is being done. If Tesla redesigns the car and adjusts how the repair is done, this will fundamentally lower the cost of repair and ultimately the insurance. Tesla insurance is essentially a product made by Tesla's internal applications team, so the insurance product can easily be made in-house and connected directly to the car, which looks at the data and calculates a risk. This software-based approach will ultimately increase Tesla's profit margins. The insurance business is changing, and broadly speaking, the work of the insurer is shifting from local human expert underwriters to automation driven by big data and AI. Existing industry players have recognized they cannot compete with tech companies. They were focused on interacting with customers, branding and marketing, while outsourcing everything else to companies with the relevant skills. In the short term, Tesla drivers can look forward to insurance that is arguably more seamless and convenient and may well be cheaper, particularly if they clock up fewer miles and drive safely. In the longer term, this is a sign that insurance, like banking, road tax and many services, will be driven by real-time data. It will probably change our behavior for the better if we're being honest. So Tesla and Elon Musk have not just added another revenue stream to their many successful endeavors, they are also helping to fundamentally change the way that we interact with insurance providers. Let me know in the comments what you think of Tesla insurance and whether they will be able to take market share in the global insurance sector. If you enjoyed the video, leave a like and subscribe to the channel for more stock market investing and business news. Thank you for watching, and I'll see you in the next one.